And I will now turn the call over to Barbara Cottom to get us started.
Good afternoon, everyone. I'm Barbara Cottom, and I head corporate affairs at Citizens. Thrilled to be here with all of you today. You know, we were thinking one of the silver linings of COVID has been our ability to bring our community partners from across our entire footprint together for events like this one. So today is the second event in our new financial empowerment series as part of National Financial Literacy Month. As partners, you all know that Citizens is deeply committed to financial empowerment in our communities. And this year we've committed $1.5 million to financial empowerment programs through your assistance. And we have 650 colleagues at Citizens who are out teaching financial empowerment literacy programs. So we're there right with you. We want to thank you for the good work you're doing. Today's session is all about your personal finance. And we have a very knowledgeable individual with us today who's going to provide us with information on core skills that are needed to manage your money and how to achieve your financial goals through smart decision making. And no matter what level you're at, young, older, how much you have to save, spend, live on, we all need help with those personal finances. So I'm happy to introduce Kim D, who is head of the Retail Branch Network for Citizens. She is a trusted colleague of mine. She's an accomplished retail and business banking executive with more than 20 years in the financial services industry. She manages our retail organization, which has 5,000 colleagues and 1,000 retail branch locations that offer a broad range of retail and commercial banking products to serve not only individuals, but small businesses, middle market businesses, and even large corporations. Personally, she is a member of our executive leadership group here at Citizens and is on our charitable giving board. She's really active in her community, a volunteer out there supporting the Invest in Girls organization, and she coaches youth basketball. So she's a great person, has a deep understanding of personal finance, so feel free to jump in there and ask her any questions. Kim.
Great, Barbara. Thank you so much for that great introduction and recognition. And I could not tell you how thrilled I am to be with this team to talk about a topic that I have a huge passion for and hope today's session is interactive and we can have a great dialogue throughout the conversation. And I just want to start by saying we have a really cool feature. And as Barbara mentioned, we've had these great experiences around connecting with so many people within the franchise, but also with our community leaders. And so this WebEx is an opportunity for us to have a chat as well. So I urge everybody, I'm going to call on folks in a minute, but we have a chat feature on the bottom right-hand section of the WebEx. So I'd love throughout the dialogue, if we could use that to get your feedback as we're tracking towards, this really great topic. I just want to start by saying, this particular topic has had a huge sort of impact on my life, both personally and professionally. And, I have a passion for it for a lot of reasons, but I have to say my mom had a huge impact on how I think about personal finance. And, I was going to retitle my presentation and just call it Every Little Bit, ... And I'll tell you a quick story about my beautiful mom. She was a single mom and put 3 kids through school and worked really hard to pay the bills and had multiple jobs to help establish our lifestyle, and always had a smile on her face, but never took anything for granted. And as I remember going to college, I was privileged to go to Boston College. As everyone knows, it's an amazing university in Boston. But I put myself through school. So myself was working 2 or 3 jobs to get that done. And every single Friday, I used to get a check from my mom, and it would be for $5. And on the memo, she would say, every little bit, right? And so I remember that thinking, because she really taught me that $5 was like that moment I'd get it. And of course, at that time frame, I'm not I won't date myself, but it couldn't buy a whole heck of a lot. But I'd walk down to the student union, I'd cash it, and then I'd put it in my drawer. And I remember that $5 would add up, weeks. So I'd have $40 by the end of the month. 2 months in, I had 80, and I'd have $100 that I could spend and do something that I know would make my mom proud. And so I hope throughout this conversation that every little bit is going to resonate with everybody, because that's what, as I've thought through my lifestyle changes from being, a working student to my first job, to getting married, to now having 3 beautiful kids. All of those, that every little bit has been something that I've always taken and has helped me get myself in a position of confidence. So what is personal finance? I think about the term, it sounds very technical and very, bank oriented, but I really translate personal finance into financial confidence. And, personal finance is really a term that we use to talk about, how are you managing your money? How are you saving? How are you spending? And how are you sharing? And it really puts you in a position of confidence to really have a plan for the future, plan for emergencies, but really have a process that you're going to use throughout life's journey to ensure that you've got yourself in a good position for success. So I would love if we could start with the chat. I'm going to virtually gift everybody on this phone some Monopoly money of $100. So if I said to you today, you had $100, I want to hear from the team. Would you save it? Would you share it? Or would you spend it? So let's see, team. What do we have? Spenders, savers, or sharers on the phone? Let's see. This is the truth serum. Felicia, save and invest, spend, half and half, all the above. Okay, so we've got a lot of different, all 3. I think some people are being honest and some people are being very conservative here. Well, I would just say a big important part of this conversation is about budgeting. So let's talk a little bit more about why personal finance is so important. I think during different times in our lives, we all are spenders, savers, and hopefully sharers, but I just want to break it down. And this may sound basic, but it's important. And as I think about what I talked about in my life journey, and I think all the folks on this phone, some of these things are going to shift over time. So I think the first thing is to assess your situation, understanding where your level set. What is your gross income? And there's a real distinction between your gross income and your net income. So your gross income is, what you get paid, right? You paid your $100 a week. And then you have to take into account what you pay for taxes, your health insurance, your 401k, and then that establishes what you have to take home. So these answers are really critical, because you think about how are you going to save. You can't expect to save $300 a month when you only have a net income of $200, right? And so you have to understand all the different fits and puts. And as I talked about before, as a college student, I have my fits and puts were paying for books, trying to get the ramen noodles because that was pretty much all we could afford. Trying to pay for a little bit of gas to get from this job to the other. But as I've evolved as a person and in my lifestyle, those fits and puts change from, buying your first home to getting your first car to paying for your credit card or planning for the future. And so those things will evolve. So even today, as I think about my gross income, I'm constantly understanding how those things break down. So let's maybe spend a few minutes on how we're going to bring that to life. So what is your total net income? So when we think about that $100, if you have $100 that you take home, that you have a gross income and you take home 40, that $40 is your net income. And so that you have to take into account what are your expenses. And those expenses are going to come and manifest themselves in lots of different ways. You want to break it down into the things you need, the things you are obligated to pay, and the things you want. And so I'll share my personal story. Right now, the needs that I have are the roof over our head, the food that we put on the table, the car payment that I have for myself, my husband, and now my 17-year-old daughter. Those are things that we have as needs just to get through the week and the day and the month. The obligations are the things that we have debt. So I may have credit card or my kids' education. Those are the things you have that you had obligations to pay for. But then I also have my wants, right? We all have things that you want. And I think it's so important as I think about the every little bit that my mom taught me. Sometimes those every little bit were things that you'd save for that were maybe the new pair of shoes that you want. I'm really into renovating. I love Flea Market Flip. Truth be told, it's my favorite show on television. I hope anybody else that likes it, please chime in. I like Lara Spencer. I like buying furniture and fixing it up. And so ironically, that's some of my wants. So Felicia, I love Felicia. You love that show. It's a great show. And so you'd think, what does Kim do on the weekends? She actually likes to finish furniture in her garage. So those are some of my wants. So how can I afford some of those things? And I may not be able to get the exact ones that I want all the time, but that's how I sort of categorize those wants. And so as you think about your net income, you have to boil it down into, where do you have the most opportunity? So when you have your total gross, you have your net income and your expenses, if it hits zero, that means you don't have anything extra to spend or make it put into those categories. If it's positive, you may have a little bit of extra money that you could invest in some of those additional needs, obligations, and wants. And if it's negative, we'll talk about that in a little bit, then maybe we have to think about alternative plans to try and figure out how we could get a more positive cash flow. So I love this rule. It's called the 50-30-20 rule. And, as you go through life's journey, again, it may change of each one of those, but let me kind of talk you through it. You want to take through that net income and you want to establish a percentage that you're going to try and be disciplined to put into these different categories. So let's walk through each one of them. So 50% for necessities. Those are the bills you absolutely must pay, right? Must-haves. Those are the rent, the mortgage, the car payments, the food on the table, your insurance, your health care. My blood pressure is going up right now. We've got a lot of these, right? We've got a lot of things in this category around what our necessities are. And the needs are really the categories you don't want to, you can honestly live without. I mean, I think we all go through times in our lives where maybe we don't need cable anymore. Maybe there's a more cost-effective way to do it. I think I did an inventory of all the apps that my kids have on all their virtual. We've got Netflix, we've got Hulu, we've got Disney Plus, we've got all these things, and guess who's paying for it? Yours truly. Is the captain of that payment ship. So, do we need all those things? And so then you have to think about what are in those wants. So the budget for those necessities is going to be 50%. You want to put a 30% budget on those wants, and those are the things you want to go out to dinner. You want to think about clothes, Starbucks. I mean, those are things that are important to me. And so I want to make sure I have a budget for that. And then you always, always, always want to have a budget for savings. And so we'll talk more about why that's so important, but you always want to try and take a bit of your income every single month and put some towards savings. I love this idea. I remember now getting through college, I remember I had a lot of student debt. And I remember that every single month, the payment that came out of my checking account was $218.21. And so I remember thinking, well, I'm going to have that come out, but you know what? Let's round it up. If I could take an even 300 out, that $80 every single month, I'm going to try and put in some sort of a savings account. And candidly, I've been doing it for years. I've been out of school longer than I've been can imagine, but that extra $80, it just got put aside. And over the last, couple of years, I've started to look at it, and we have upwards of, $15,000 that I was able to save for those opportunities. So I think it's important to really discipline yourself around understanding the 50-30-20 rule. But those things are going to flex as you go through life about where you might want to spend. So someone asked a question in a minute about retirement, and a few slides, I'm going to get to that. And I think it's a really, really important point around how you want to save for retirement. So let's go to the next slide, Tracy. Tracking expenses. You know what I'm not good at. I am not good at this. Anybody else, this is something I'm good at. I'm good at spending, but I'm not always great at tracking it. And so I think it's important, especially as things get a little bit more complex and we've got more things that we have to think about. It's so important to track expenses. And I would say this past year, all that we went through, and Barbara and I were chatting ahead of time prior to getting on the call. There's so many changes that's happened over the last, 12 to 18 months with the pandemic. And I think our lifestyles have changed a lot too. And so some of our expenses have shifted. For example, my gas expense isn't as much as it used to be because a lot of us are working from home. But candidly, my expenses that I'm spending on home improvement are a lot higher than they were because I'm looking at that old couch that I haven't been able to afford to change, and now I'm maybe doing some of those things. So expenses are going to change, but tracking them is really, really important. And so, I mean, it's really up to the individual around how you want to think about this. Tracking daily for me is a little bit too much, but I think tracking weekly and monthly, and just being honest with yourself to do a review of some of the things you're spending money. And so, I'd love to hear from the team. How do you track your expenses? Do you look at it monthly, weekly? What are some of the ways that this team tracks their expenses? Tracy's been using Mint. Mint is an awesome application. Yeah, monthly. Weekly with Mint. Awesome. So as now I've established, you heard I went to college. I've now got married. I've got 3 kids, and I'm teaching my girls now. I think financial independence and confidence is very important for so many, and I'm really ensuring that my 17-year-old and 14-year-old daughters understand the significance of being financially independent, but really talking about that and understanding. And they don't understand what money is, cash. They usually typically see it on a debit card or a credit card. And I remember when they were younger, being at the grocery line, and they just started going to the candy line, just throwing everything on top of the conveyor belts. And I said, "What are you doing?" They said, "Well, Mom, you work for the bank. You have all this money, right?" Because they just see me swiping my card. Well, reality's hit hard for the 17-year-old that she has to pay for her own things. So tracking expenses, it's brought me back to why it's so important. But why is it so important? I mean, it really is important to make sure that you're avoiding the expenses that you just didn't anticipate. So things like late fees on your credit cards, or interest on loans that you want to make sure you should have paid off, or candidly loss of services if you couldn't pay for something. And the most important is having a negative impact on your credit report. So it's really important to have line of sight on this. If my husband Kevin was on the phone, he would say that this is an opportunity for me for sure. But there are other things that I'm good at, I can promise you that. So next is establishing savings goals. It's really important to understand, what are we saving for? And I would really bucket these into a couple different categories. One is savings for the short term. And when I say short term, that's really, within a 5-year window. And then long term are things that are 5 years out. And, the reason why I want to save, it sounds like common sense, but gosh, those unexpected expenses can really sneak up on you. And you have to ensure that you've got a plan in place to really get ahead of it. Reoccurring monthly bills, annual expenses, things that maybe are new to you that wouldn't have come up in prior years. And so you really have to make sure that you have a line of sight of what those are, and you want to establish a plan to get there. So an interesting stat that I've been sharing with folks, and it's something that I've been trying to track for my own benefit is, one is people say, well, how much should I have saved? And maybe I could just give some ideas of how to think about that. I mean, you always want to establish a savings fund, an emergency fund, and you could start with something as easy as $500. And then maybe you want to step it up to $1,000. And as you think about $1,000, what could that pay for? Could it help with some car repairs, maybe some new tires, or something that would be that immediate? But you always want to make sure you have saving for something that maybe is a little bit more traumatic. And so one establishment that I would say is you always want to save at least 6 months worth of what your debts are. So if you have every single month you have to spend $5,000 in all your expenses, you want to save at least 6 months. You want to try and have at least $30,000 in your savings account, because that $5,000, if you lost your job or some impact to your family, you want to ensure that you have time to get ahead of it. So good rule of thumb is to have 6 months of savings of whatever that the debts or the expenses that we just walked through. But what should you save as you think about the future? And a good rule of thumb is that by the age of 30, you want to have 1 year of your income saved. By the time that you're 35, you want to have 2 times. And by the time you're 40, you want to have 3 times, so on and so forth. And as you think about retirement, I mean, it's a pretty aggressive number, but you want to try and save at least 15% a year in your retirement. And you may work for a great company like Citizens, where, I put in a certain percentage and they match, or you may have some other benefits that some other companies may offer, but that's an opportunity for you to really be disciplined about your retirement. And, candidly, I hadn't been spending a lot of time with it. I'm thinking about that more frequently now than I had before. And I'm starting to think more disciplined about it, but it can sneak up on you. And I think having that discipline around 1, saving for emergency, 2, having enough for 6 months, and then 3, making sure you have enough for retirement is really, really important. So you might say, Kim, how do I create a savings plan? This sounds, basic, but I think one is you have to establish what that goal is. And I think it's important to understand what you can do and understand what's needed. So for example, you might want to be taking a vacation, a 3-day vacation. You want to go to Newport for the weekend, and maybe that might cost you $600, and you want to do that in August. So that's a real target to send. And so you want to establish the amount that you need. And then you want to say, well, if it's in August, I only have, 4 months to get there. So you want to establish, well, how much do I have to save every single week to get to that 600 goal? And that's the amount that you want to save, and establish it by, every single week, that the time you want to sort of put it aside. And so I think having those goals are important. And it could be as small as saving for a vacation, or it could be as big as saving for a new home, whether it's a down payment. It could be saving for your kids' education. It could be buying a new car. I mean, all those things. So, there's different scales that you might want to put into place, and you may be saving for multiple things. So, really establishing some things that you're savings for. So let's hear from the team. I would love to hear what people are saving for. What is the big thing on your savings list? Patrick, a house. Well, good luck with that. That's exciting. Carolyn's saving for a home. Brittany's saving for college. That's great, Brittany. Student loans. I hear that. Kids' college, home improvement. I don't know, Barbara, does these resonate with you?
Oh, yes.
Yeah. Grandchildren on a trip. Jan, I love that. So all great things. And I think, establishing a plan, it doesn't just happen. It's just really important. So let's talk about preparing for unexpected expenses. And, I thought this was interesting because candidly, I did this exercise myself a few months ago. And I think these are the ones that you don't anticipate. And so I started to circle the things that I had last year. And, some of them I didn't have the prior year. So things in my life were, some family loss. We had some medical expenses. We got a new pet. Well, let me tell you what, that puppy is the most expensive part of our family right now. She's gorgeous, and I'm going to pull up a picture for you guys and show you in a second, but she's expensive. So how do you handle that? I just said my daughter turned 17, so getting a new car, an automobile that is safe enough for her to drive, and we feel good about it. So then you have to list out those expenses and make sure that you can prepare for them. And those rainy day funds that I talked about are really important to establish a baseline, but it also builds confidence as you think through, establishing timelines and milestones to get there. So I would urge everybody to do this for yourselves. What are the unexpected expenses you had last year, and making sure that you have a plan and estimated cost. So how do you save? It's a really good point. And I think through some of the ways that I just described that I did that, and some of the ways that I typically would do it is I always saved on payday. It was something that, I would establish something where that $80 that I talked about that I put in addition to my student loans, it came out on payday. And honestly, after a while, I just didn't know about it. And I became agnostic to even knowing it was going out there. Setting automatic transfers. At Citizens, we have some really cool programs. We have an initiative called Steady Save, where it automatically transfers over to a savings account, or we have some sweep accounts where you can go into an investment account, and lots of companies and banks have those, but it's sort of setting up that automatic payment, where it's kind of been there and now it's gone. You don't worry about it. And then take full advantage of salary increases. I thought this was interesting. As you go through, hopefully, some career progression, and you get those opportunities to get an additional payment in your paycheck every single month or week. It's so important to say, well, I was living okay when I didn't have it. So if I can maybe think about what I could do with that extra money, it's important. And so a new promotion is a great opportunity to get ahead of it. And if your lifestyle is feeling good and comfortable now, and you get that extra bump, well, guess what? That's a really cool way to add some additional ways to save for retirement, but also just get ahead of it. So as you think through your future, whether it's retirement or saving for that big purchase, like a lot of home buyers we have on the phone, that's just a really great way to think about it. So, what to do when money is short. We have all gone through those times in our life where things just don't go the way that we had thought they were going to. And I think it's just important to think about how you could get ahead of it. And I just wanted to share some practical tips of just ways to manage that. One, I would say, first and foremost, is ask for help. And I think there's so many opportunities that, folks can leverage to ask for help, just to get advice on how to think through these difficult times. And I again think of the work that my team gets to do. Barbara shared, I have the privilege of working with over 5,000 colleagues, and their job every single day is to help our customers and to help them plan for the future, but help them most importantly through difficult times. The second is, taking a hard look at how you might be able to reduce your expenses. There are lots of those needs that we talked about, but there's also those wants that maybe we could limit for a couple months to get ahead of it. Third is, if you are having challenges, I know a lot of folks had some challenges last year around displacement with jobs, and loved ones, getting a different financial situation. I think it's so important to talk to your bank or creditor, and they are so helpful if you can be proactive in coming up with a plan. So maybe your bill might be $200 a month, but is there a way that they could say, you know what, if you just gave me the interest this month, that's fine, and maybe you'll get back on track next month. They're very flexible if you're proactive. And then the next step is really prioritizing bills. And I want to spend a minute to talk about that, because I think it's important to understand, what the impact is if you are having a difficult time, that if you don't pay certain bills, the impact it could have on your life. So maybe flip, Tracy, to the next part of the conversation. We all understand some of the bills that we might have, and how do you think through which ones you want to pay in full, how you want to pay some partial, or maybe you might pay some late. And I think the things that you want to understand are the impacts that those decisions could have if in fact you didn't make your mortgage payment. That's a big one, right? You always want to pay for the things about like the roof over your head and the food on the table. And so I think, paying for your rent and your mortgage is really important to put that at the top of the priority screen. Are there things that, paying for your car, if you didn't have your car payment or you didn't have that, could you not get to work, which means you couldn't go to your job and you couldn't then get the income that you need. And so I think you really want to prioritize what those could look like and ensure that you're focusing on the biggest priority and sort of going down the list. But I'm hopeful that the savings plan that we just talked about and getting ahead of it will hopefully get people in a good position to not have to worry about that. So last is, I just want to focus on, how citizens can help. I would not be an opportunity to share that I think some of the great work that the team does is, really providing an experience that we are your trusted advisor. We're your partner. We're sitting side by side and we're talking about the exact things that we just went through around, what are your plans for the future? What concerns do you have? What obstacles might be coming up the next 12 months that we can plan for? We have an amazing program at Citizens called Citizens Checkup. It's a way that we talk to customers around understanding their needs and making really smart recommendations of how you want to plan for the future. I think there are amazing ways that you can go on through our digital apps and go, Mint is a great example. I think it's a great application of how you can save for the future and understand, really, am I a saver or am I a spender? And I think it's important to understand that. And if you are a saver, that's great. But if you're a spender, then you might want to have a little bit more discipline around looking at your monthly recap every month. And then, how do we create distinctive experiences and think through how we can help you achieve your goals? Am I financially fit for the future? How do we think about planning for retirement? Do I have student loans? Am I planning for a home? All those things that we talked about around those goals are just exciting things that I think a really great bank partner can help be your partner and figure out a plan. So just to recap, I started with saying that every little bit, and I hope this conversation shared a little bit about that every little bit does matter. I think, coming up with a plan, being transparent with yourself around, where you are today and where you want to go is so important. Understanding where you are in life's journey and things probably get more complex as life goes on. But then making sure you've got a plan and, every little bit can help to get you in a better position for success. So I was going to pause there, Jane, and I would love to hear from people. I know we had some folks that maybe did some questions ahead of time, but anything that's on folks' mind, would love to offer any thoughts.
Yeah, thanks, Kim. So yes, we do have a handful of pre-submitted questions here. So as we wait for folks to send in new questions in the chat, we'll start with those. So this first one here is, what are some examples that you've seen of personal finance changing or evolving during this new normal?
Yeah, that's a great question. I think I started to talk about it a little bit. A couple of trends I think we're all seeing. I think, obviously a lot of companies have shifted their workplace requirements. And so we've got a lot of people now that are working from home. And so I think some things we're seeing shift is, what are the needs that folks have within their workplace that they might need. So I think, candidly, some of the changes we've seen is, for example, my office is now you see me here at my corporate location, but I do have one at home that I spend more time at. And back to my flea market flip, I upcycled a desk for myself, and it's squarely in my bedroom in the corner. So I had to equip myself where I have more space and a workplace from home. So that's one that I think has changed. I also think, where we spend our money has changed. I think, probably people are spending different in terms of they're not eating out as much. So maybe they're using more of the online shopping that maybe might be different. So, and there's some really cool ways to save on those types of features as well. I think, obviously folks aren't driving as much. So maybe the extra money that you might have spent on gas is a way that you could put more money into your savings account. I think some of the trends we're seeing just in the industry are folks that maybe, were living in the city, but now that was too expensive and they want to live in a more rural area and have a bigger home. And so, because they're not driving to the office. So I think it's been, a paradigm shift in terms of how people are thinking about their lifestyle. And then that may have shifted how they're establishing their goals for the future. But it's been a really interesting year for so many reasons. But it'll be interesting to see what the new normal looks like. But I think we're starting to see more, more confidence about people getting back to work. But I do still think we're going to have a lot of folks that will have a work from home functionality.
Great. Thanks, Kim. We did get a great comment from Brittany in the chat, and she said she recently paid off her car and immediately set up a direct deposit on payday to her savings account in that same amount. And it helps do this before you start using that money for something else. Much harder to go back and start saving it later. So
yeah, that's great, Brittany. I think that's a great example. When I was talking about my student debt, that $218.21, it's going to be branded in my head. That just became a normal for me, and it just has consistently been something you can always save. So that's great. Congratulations on paying off your car. That's exciting.
All right, we do have a question here in the chat, and it's from Amber. With large debts like student loans, would you prioritize building your savings or paying those off early with any extra funds at the end of the month?
That's a great question. So I would take it a couple different ways. I think sometimes you want to think about it in, if you can, you could always, if you can pay a little bit more, it's going to help you in the back end because it's going to reduce your payment time. And so if you can do that discipline, I think that's a really smart decision. If you can't, I think you always want to think about, well, what interest rate am I paying? Am I paying, 18% or 7%? And then what interest am I getting paid in my savings account? So you might want to say, well, if I have to pay 7% every month on a loan and I'm only going to get 3% here, it probably makes more sense for me to pay off the debt sooner. Now, sometimes that could work in the reverse. As we thought about the last year, the rate environment has been shifted, but you want to think about that and what you're going to get in your savings. But more importantly, how are you going to free up additional cash flow by paying it off sooner? So I think sooner is always better if you can do it. And I think that if you can pay not just your interest, but you pay your interest plus your principal, that's going to be able to get your time frame down even faster. I'll be honest, as I think through my life, my husband and I have talked a lot about that around, paying, do we want to pay off our mortgage faster? Do you want to put more in savings for our kids' college? And, our kids go to a private school, so we spent more time paying for education than we maybe did on paying off our mortgage, but that's a personal choice as well. So it depends on your personal circumstance, but I think that's a really great question.
All right, thanks, Kim. We've got another pre-submitted question here, and it is, if you have any financial advice specific for people that are just entering the workforce.
Yeah, well, congratulations on entering the workforce. I think like anything, I think you want to, that budget I talked about earlier, I think is really important. And so now you're going to have additional income that you didn't have before, but you probably have, more bills you may have not had before too. You might be moving out of your home or getting an apartment. So, I think it's really important to establish, some conservatism just to understand, just to get yourself acclimated with this new normal for yourself as you get your first job. I also think it's important to establish some sort of a discipline around savings. And candidly, I'm not, I talked about my mom, but it literally was the $5 and that turned into 5 or 10. And those are, it sounds small, but it becomes big. And I think those are, you're going to have more things you didn't think you had a plan for. Like maybe you might have to spend more money on clothes because you're going to the office, or maybe you might have to, you're going to spend more money on gas than you did before. And so those are things you probably didn't have prior to getting your workforce. So I think establishing that budget I talked about and really outlining your expenses and building a discipline, I think is important. Just as important, I think it's important that if your Starbucks coffee is super important to you and you have something that you want to treat yourself to, you have to keep in mind that that's just as important, because those are the things that get you excited about going to your job, is that you have a little bit of money to do something that you love. So I think making a list of those expenses, establishing a budget, and having a little bit of a savings is really critical.
Great.
I just saw someone in chat said their daughter's first, I think I read it quick, but right out of school, just got her first, saved $100 a week, and now she's buying her first home. So that's exactly it. That's perfect.
Awesome. All right, next question here is, what should I expect when I meet with a banker to discuss my finances? Is there anything I should bring to the meeting?
That's a great question. Well, first, I think I think building rapport is important, and you have to trust the person you're sitting with. So I think, my advice would be, is to be able to be prepared to talk about yourself and, what your plans are, what you have around your expense worries, and what you're saving for, what your obligations are, just as we went through, and really ask for their advice around, how they can plan and make some recommendations. I think anytime you have an opportunity, meeting with a banker or a financial advisor, or it shouldn't be a one and done experience. It should be iterative. And so coming up with a plan and constantly coming back and revisiting it together is just as important as establishing one, because I think putting on paper is one thing, but actually doing it is another. So I would say finding rapport with that person first, and asking them great questions about the things that are on your mind, around how you're planning, and I think that's going to catapult into a great conversation.
All right, thanks, Kim. This one is about the stimulus checks. So are there any recommendations you have on how best to use those, and or the tax refund to set myself up for success?
Yeah, that's a good one. I would say, I think the stimulus check is a great opportunity. If you've been able to live your lifestyle without spending it, and it could be something extra, I would always urge to say, is there a piece or portion of that you could put into savings? I think it's just always an opportunity. Is there a particular debt that you have been wanting to pay off that maybe you could, as I described earlier, pay a little bit more of? I think that's important as well. So I think really being thoughtful, but it's interesting, because I think as we looked at the climate of what was happening in the banking industry around the stimulus checks, we did see a lot of folks that were saving it, which was great. But if you want to buy the big flat screen TV, and maybe that's a must-have, that's one thing. Or if not, I would just challenge you to say, what do you really need it for? And if it's an opportunity to give you a step up to get on the front foot of something, I think that's really important. I forget the second question, Jane. I apologize.
Yeah, it's the same thing. Any recommendations regarding the tax refund in addition to the stimulus check?
I would say the same. I think if there's an opportunity for you to think about your debt equation, if there's things that you could pay down faster, if there's an opportunity to do a little bit into savings and maybe split it into some opportunity to save, some opportunity to pay down, I think all those are great ideas if you're getting a refund or the stimulus check.
All right, so we do have a few more pre-submitted questions, but just a reminder to everybody, if you want to send in a question in the chat, you can find the chat button at the bottom right corner of the WebEx window. We've got one here, and it's, how can I avoid bank overdraft fees?
That's a great question. I think, Tracy, I was just going to go back. If you go back, you'll keep it on here. That's fine. I think it's important to, when you do a list of understanding your priorities, right? You always want to know, what do I need in my checking account every single month to pay my bills? And so I think, it sounds basic, but if you need $2,000 in your checking account to pay your mortgage, your car payment, your food, et cetera, that's going to be one step to not have overdraft fees. I think it's smart. Sometimes you can establish your savings account as a form of overdraft protection. So that's a cool feature too. So if you know that you might overdraft by $10 or $15, a lot of banks will take that money right out of your savings account to actually avoid an overdraft fee. That's another option as well. And the third option is, which isn't always a perfect one, but sometimes you can get an overdraft line of credit, which it acts a little bit like a credit card, where maybe you might have a $500 overdraft protection that would serve as that safety net. So if you did go in the negative a bit, maybe paydays on Friday, and you had something hit on Thursday, that may give you, a couple days to get back. And, but the most important thing is if you have an overdraft line of credit, you want to pay it back. So one is understand what you need in your checking account every month. Two is, could you establish your savings account as your overdraft protector? And then three is, could you establish an overdraft line of credit?
All right. We've got a question here in the chat, and it's, do you have any suggestions for someone in their early 40s who hasn't saved much for retirement thus far?
I would say every little bit. It's never too late to start. I think the more you can just establish something to get yourself started, it's just going to be an important night. So I would say sitting with a financial advisor, going into a branch and really talk about, what your plans are for retirement. But I think starting as soon as you can. And as I mentioned earlier, I think if you could start with 1%, 2%, every little bit's going to make a difference. So I think it's great that you're thinking about starting, but the sooner you can start with a little bit is going to be important. And, over time, you're going to see that it's going to grow very quickly. But I would suggest sitting with a financial advisor or a banker to start to talk through, what you can afford.
All right. Do you have any recommendations for books or online resources to learn more about managing finances?
Oh my goodness, Barbara, this could stump me. I think I have so many. I'm trying to think if I have my bookshelf in here. I think it depends. I mean, I think, thinking of, there's so many articles out there, there's so many podcasts, there's so many, I would just think about, understanding what need you might have, and thinking about where you are in your life. And candidly, I would just Google and Google what that option might be, and they're going to pop up a lot. There's so many books and articles out there. So I'd be dishonest to say if I could tell you what the best one is, because there's so many great ones out there.
All right. Somebody did ask if the slides and recording will be made available to attendees, and I can answer that is a yes. We are recording, and the slides will be made available. All right. Let's see. Do you believe mortgage rates are going up or down over the next 12 months?
Tracy, they're calling this is Kim's crystal ball now. I don't, I don't know. I think right now we're in sort of a steady state. I think as the economy is starting to get back in the swing, and I think we're hopefully going to start to see a lot of momentum around that. I think that, that will shift sort of buying behaviors and, what rates look like. But, candidly, right now, they're still very, very low. So, for the folks that are looking at refinancing or buying their first home, it certainly is a great time to do it. So, but like anything, that will change. But I don't see a big shift over the next 6 months. But they definitely are still really low to take advantage of it.
All right. So we've got a question here in the chat, and it's, with interest rates so low, where's the best place to keep emergency savings? Should we keep the entire 3 to 6 months of savings in a savings account, earning less than 1%?
Well, don't keep it in your mattress. So that's the one thing you can't do. Okay. We don't want to keep it any place but at a bank. So let's start there. It's an interesting question. I think if you need the money to be liquid, right, if you want to have access to it, I would say, although it's only 1%, not great. It's a great place to have it as a savings or money market. If you have a little more flexibility to maybe have it, tied up for a certain amount of period, we have, folks may have heard of a certificate of deposit where it's a CD where you might be able to put it in for 3 months and you're going to get a higher rate, or 6 months. So that's going to lock you in for a time frame. If you have a little bit more flexibility, then you might want to be able to put it into different mutual funds, and that would be where you'd required to sit with a financial advisor to talk through some of those things. So it really depends on how quick you need access to the cash. If you're saving for a home, you need that 20%, you might not want to put it locked up in mutual funds. Maybe you need a savings account. If you know that you need it in 3 years from when you're going to buy a home, then maybe you might have more flexibility. So it really depends on your liquidity and how quickly you need it in terms of where you might want to put it.
All right, lots of great questions. This one's a good one, and it is, what's the best financial advice you've ever received? I know that you've mentioned your advice from your mom, the every little bit, but anything else that you may remember that you received for financial advice?
Yeah, someone taught me at a young age to be as aggressive as I could be with my 401k, and whatever I could afford, try and do as much as I could. And it may feel a bit painful then, but I'll tell you now in my mid to late 40s, as I look at my 401k, it was a good decision that I made. And so I would say that as much as you can do, try and put as much in your 401k. Sort of, as they say, set it and forget it, right? You're just going to put it away and then you're going to start to see it accumulate. So that was definitely a good piece of advice. I think always understanding your debt situation is important, and making sure that if there's opportunities for you to not have a lot of debt, right? It's important to know, credit cards can be a really good thing, but they can also be a detriment in a lot of ways. So you obviously don't want to overbalance your financial confidence on the debt side of the equation, but there's a lot of smart debt too. And as a young woman, I was taught that, it's important for me to establish my credit history and be an independent person. And so I think having some sort of credit to demonstrate your ability to pay back is just as important. And so I would urge folks that when comfortable, if you don't have access to credit, to get a small credit line so that when you do want to buy that first home or you buy your first car, you're going to have some credit history where they'll say, you know what, I want to give Barbara that new car because she shows she's really responsible and how she can pay back her debt. So that was a lot, but I think those were some of the things that people gave me as advice that I took on and has helped me for sure.
That's great. So it does look like we have answered all the questions that have come in the chat. So I will turn it to you, Kim, for any closing comments before we end the call.
Well, I was just say thank you for the opportunity and engagement. I hope folks found some of these tips helpful. If I'll be honest with you, every time I give this presentation, I find myself fine-tuning my savings plans and, thinking through how I want to tighten up some of the things I think about. But, as I open the call, I think it's really about financial confidence and, thinking through some of these things at an individual level will hopefully put everybody in that position of confidence. And I want to thank Barbara and her team for having me today. And hopefully this was helpful for the team. So thanks for the opportunity.
Thanks, Kim, and thank you, everyone. That does conclude our call for today. You may now disconnect.